Okay guys, so I'm going to show you the other moving average, the standard setting from AstroFX. So we're going to have the 8 EMA, which I've gave you the basics of and the basis of, and I'm also going to now go into the 14 EMA and how to use them more or less combined. It's quite straightforward, quite simple. As you can see, nice clean chart here on the GBP AUD. Recently just rejected levels at 1.8350, popped back above 8400. I'm currently waiting to see the next move. Are we going to take out this high of the wick here? Are we going to maybe rebound once more off this 8500 resistance and then roll over to the downside, or we're going to take out these levels and go higher? So previously we set up the Astro EMA, which is right here, and it comes down to number one, do you want any EMAs on your chart? Do you want just the 8 Astro EMA, or do you want the 8 and the 14? So let me go into the 8 and the 14. I've already set up the template for this. It's quite straightforward. Once again, if you go into the indicators, type in moving averages, or even just moving exponential. Number 1 will come up. So we put that length 8, source close, offset 0, style. Okay, there you go. And then the secondary one, we repeat that process. So we now get the 14 EMA close. And make sure this one is offset 1. So as you can see at the minute, moving averages have just crossed back over to the upside, crossed to the downside. We broke back below. Continue, continue, continue. What you need to note here, again, really easy concept, is that the 8 EMA, the reason why I went through that first is because that holds a lot of power. Even when we add the layer of the 14 EMA onto the chart, the 8 EMA has the most power when it comes down to what I've already mentioned about the price, balancing above and then breaking back below. So you can see here we broke back below the 8 EMA. We broke back below both moving averages, but we broke back below the 8 EMA, we retested it, and we remained below until we broke back above, and so on. Now, at the moment, what we can see on GA is that we dip down into the regions. I would more or less put my cursor right here at 1.8350 psychological level. We have a tweezer bottom formation, but what's important is that the market pulled back up, not only back above 8400 resistance, but we pulled back above the 8 EMA, and also the 14 EMA has now crossed over. So the main concept to be aware of here, to separate the doings and the usings of the 8 EMA from the previous video, is now that 14 EMA adds confluence for the crossovers. So 8 EMA, we have the break and the rebound, and then the 14 EMA, this video is focused on the crossovers. So the market has broken back above, so it's more or less adding an extra confluence to your trading. If we go into the daily on GA, what we can see though, and I will, please make a note of this, the daily is important when combined with the 4-hourly. The 4-hour and the daily are the most important here. If we can, in an ideal world, in an ideal scenario, can only, let's say GA, the MAs are down here on the day. Let's say the market dips back below and then the moving average crosses to the downside, meaning the daily and the 4-hourly are now in synchronization. Meaning the daily and the 4-hourly are now in synchronization. What I would then suggest is to trade solely in that direction. Trade solely in that direction if we can. That's not to say that, you know, we have to stick to that as a solid rule, but it will help you when it comes down to your intraday trading. So let's say daily's down, 4 hours down, and then the hourly, what we expect then is the hourly to cross and follow. So it's always the blue, the more responsive one, the 8 EMA, which we've already highlighted in the previous video as being the main importance here. Let's say the day's down. Okay, let me just write some text. Daily, cross down, H4, cross down. Then what we should do on the H1, sorry, so if the 4 hours down, the daily's down, what we want on the hourly is to now expect and trade that downside crossover. So we would now wait if tick box, we would now want to wait and see the crossover to the downside on the hourly and follow to swing in. So more or less it's following the higher term picture, the bigger picture, the market needs to follow that and so on. But at the moment we do not have the crossover to the downside. And that will be an ideal trend, a trend following set of rules. Simple as that. So I'll remove that for the time being. If you look at the weekly is still balancing. The weekly is still balancing on the moving averages. We did break below the 8 EMA last week though on the closure, and now we're more or less it's balancing on various areas of support. 8,300, which you can see on the intraday time frame, is back above 8,400, so it's already done plus 100 pips this week. Let's check out the. We'll get to USD CAD in a moment. But if we always wait for the weekly time frame to follow suit as well, we can be in for lagging trades overall. So just a word of advice would be to stick to the daily and the 4 hour. Daily down, 4 hour down, then we can catch the intraday swings and the intraday price movements. Again, it's so simplistic that some of you may not want to have the 14 EMA on the chart, maybe just want to stick with the 8 EMA or have no moving averages at all. So some of the videos which I'm going to go through throughout the rest of the content, I am going to maybe have no moving averages on there. I might have just one or may have two, and I'll explain as I go along. So sometimes I just like to mix it up, and sometimes I might keep it on just one or two currencies, and then the other currency pairs I might not have at all. But what I'm looking for here, I know the weekly is up, but the daily and the 4 hour are the best time frames to merge together. So what I would like to see potentially on GA, because we're kind of in no man's land at the moment, if I was to just throw on a few pieces of analysis, we have top end here. We also have the more or less 8,500 region, I'll just highlight that, which was supported before market ran into what, 8.7, okay, came back below, broke below 8.5, retested 8.5, made highs at 8.533, and now we remain below these two boundaries. So only if the market really pushes higher and breaks that structure can I maybe consider, okay, this may start to go long, but for now what I'm going to be waiting for is the market to dip back down. Because the blue has, if we want to, a good trick is to remove the candlesticks, and we can clearly see, and you can put these at any thickness you would like. So we had the crossover to the downside, came through the supportive region which I've just marked on. Number two is that now the market dipped back above 8.4, and also the moving average crossed above the red. So the 8 has crossed the 14. Now what I want to see is the market pull back below, and then the 8 EMA do another swoop or maybe just rebound. Once the 8 EMA is back below the red there, then that's good. It's a good confluence for me to now say, okay, GA is now going to roll over. Where to? Maybe 8.2, and then so on and so forth, maybe even back down to 1.8. But for now, as it's in no man's land, because if we look at the price action on the hourly, it is sideways. But if we do get that 4 hour crossover in line with a daily, then it's all systems go to start to look for bearish swing trades. So I will be looking at catching up with this one maybe later on or throughout the rest of the week. Today's Tuesday, 2nd of April in the London session. Let's get on to the USD CAD. USD CAD, let's have a look at this one. So starting on the day with USD CAD, we had bearish momentum on Friday come through. Yesterday, Monday, we opened, we retested into the box region, and as you can see, the blue moving average just crossed the red. And it's been some time since. So when the market consolidates and we can see choppy price action, the MAs will come together. and then they may rebound off each other and so on. Again, just take the candles away if you need to, and that will give you a clear insight into what's going on when it comes down to the MAs. Now you can see with the candles out of the way, the 8 EMA has crossed the red. The 8 has crossed the red. So it's down on the daily, and look, it's down on the 4 hourly. It was above the H4 for quite some time, then bull market sentiment changed, intraday sentiment, and now we retested back into the moving average, which you guys know from the last video, which can happen a lot. We can swing, we can consolidate, okay? Sudden movements can consolidate, pull back into the MA, little retest there, and then drop off. What I can expect now on USD CAD is a rollover after hitting the MA, again, because that's a dynamic area of resistance, and with chart time, putting in those hours and backtesting with these two moving averages, you will see how useful they can be together. So now my bias for the hourly time frame is that one confluence that can really help us here, guys, is that the daily's down, the 4 hourly is down. Now what we're looking for is the hourly to, boom, cross over and follow suit. So market is retesting. It could maybe pop up here, another 10, 15 pips or so, but the other confluence that can really help us is now the blue crossing back below the red, so the 8 crosses to the bearish side of the red, and then momentum can pick up steam and maybe take us into 3250 over there. Going into the 30-minute chart, I haven't really covered the 30-minute chart in detail. I'll do a video specifically and solely on the 30-minute chart afterwards. I'll get to that later. But yeah, for now, I think that USD CAD, we could be in for a potential swing to the downside there. One thing I do notice is 3300 psychological level was tapped, so it's having a little bit of a hard time off that barrier. It's popped up around 32 to 35 pips right here now, and then the market is expected to swing back to the downside because of the sentiment on the weekly and the daily. So that was quite straightforward. And then if you go into the gold chart right now, I'm looking at gold melting actually. Right, gold. So you got the Fibonacci on here. That video is coming right up soon. But what we can see on gold is we made the highs. We've dipped back below the moving averages just here. Okay. For some time, as you can see, the blue 8 EMA was riding above the 14. For quite some time. Market will pull back into it, will consolidate. We can mix this up with some box regions as well, really handy, very clean. We've got the crossover to the downside, crossover to the upside, crossover to the downside, putting on the candles once again. As you can see, the MAs may look that they are looking as if they want to more or less spread their wings in a sense. So with gold at the moment, we broke below, we consolidated. Now we threw one spike to the high, two spike to the high. I'm looking at gold like pushing down into one of the fib regions, the fib targets, which I had my risk reward tool lined on the chart right there. But the daily is down. Let's have a look at the 4 hourly. The 4 hourly is down as well. If we take a look here, if I remove the candlesticks for a moment, the MA was riding above. We had a mini crossover. But again, we were supported. The market was making higher lows at that time. Upside, then we have the crossover, and then we start to converge. As you can see, if I go on to the wicks, 1, 2, so we've got a mini intraday lower swing high. The market is continuously, retesting the 8 EMA, you know, the rules from the other video, but it's also the daily and the 4 hour are in synchronization with each other. Let's look at the hourly, and the hourly is also down. The hourly is also down. So following the daily suit and the 4 hour suit, I do believe that we also broke this mini 4 hour supportive area yesterday. We're retesting that now, and my target is for the Fibonacci. So I'm looking at gold dumping, and gold can come all the way back down to 1240. So it's going to be interesting to see how this thing moves over the next few days and weeks, but the MAs are lined up pretty nice there as well. And you can see from the upside crossover, the market sustained and remained above, came into the resistance, came into the fib, came into the region, the range, broke back below, and then dumped. So we had the crossover there. So that's the basis of the 8 and the 14 together. I hope you enjoyed that video, and I will be catching up on this on more live market exercises, and I hope that cleared up a few things in regards to the differences of the 8 EMA and the 14 EMA and how we can use those together for trend filtering. And it's a really, really easy concept, the day and the 4 hour, same direction, and it will, again, when we put all of these tools together, it can make a lot more sense and help you with your chart game, your chart work extremely, extremely well. It's quite powerful. Very, very simple, but quite powerful.
I just want to go back.